Welcome everybody for joining today's event focused on updates to the new uniform guidance or updated uniform guidance and single audit requirements. I know there's a lot of interest in today's event with all the stimulus and money flowing from Congress that's been approved in multiple packages. And so it's my great pleasure to introduce today's speaker, which is my co-leader for our nonprofit practice, Shannon Winter. Shannon, you've heard probably on prior events, but just a little background on her. She's a partner in our South Bay office. She helps co-lead our nonprofit practice, one of our key leaders for anything government funding related. PPM is a member of the Government Audit Quality Center, and Shannon is our key representative in that regard. Lots of great experience with all sorts of nonprofit organizations, whether social service, associations, foundations, religious organizations, etc. Shannon, maybe to set the tone for today, just give us a sense of the landscape with everything going on with all this money getting appropriated from Congress, and what are your 2 cents here?
Yeah, there's been a lot that's been happening and going on. As Daniel mentioned, there's been a lot of new federal funding, a lot of new programs that have come out within the last 12 to 18 months. And one of the things that we're finding is as this new stimulus and these new funds are becoming available in the federal funded world, there hasn't been a lot of guidance that has stayed up to date with what's happening. So what we're finding is the funds are coming out and the guidance is updating and changing throughout the landscape. And the guidance is slowly starting to make those changes throughout as the funding, a couple months after the funding actually comes out. In relation to that, they've also decided to go through and do some updates to the uniform guidance. So talking about the uniform guidance, one of the things is the uniform guidance did come out in 2013. I always laugh that it came out right on December 26th via a YouTube video because everyone was sitting around waiting on December 26th to find out what new updates OMB was going to come out with. They did go through and they did an update in August for which certain items were effective in August and other items became effective in November. So this presentation will focus on those items that were incorporated in the November implementation update. We've provided a couple links for where you can go through and find the uniform guidance or 2 CFR 200. With that being said, the OMB is required to review uniform guidance regulations every 5 years. And so, of course, the 5 years happened in August of 2020 because the OMB was not just trying to update the compliance supplements and staying on top of the additional funding. They decided they also wanted to update the uniform guidance in 2020 and keep everybody on their toes of what the changes are going to be happening. As I mentioned, there were some actions that were effective immediately in August of 2020, and the other ones happened in November. I've provided here a couple of resources for where you can see what the old uniform guidance or 2 CFR had, as well as the update via a red line version. So what happened, what were the changes, and you will see that if you go to the 2 CFR 200 website, it is updated with all of the new guidance. It does not refer to the old items, so these items will help you kind of summarize that information. And there was some additional questions that got issued after in some additional sections. So what changed? There were 2 sections that were effective in August, and the remaining became effective in November. Although it's not directly addressed in the uniform guidance, the OMB has stated that these revisions should apply to all new awards that are issued after November 12, 2020. But it's also important that what that means is you're going to need to go through and update your internal policies to align with the new revisions. We're still trying to find out more information for what does this mean, because this uniform guidance is issued directly to the federal agencies for what they need to be incorporating into their guides for their funding and for their awards. So what does that mean if you've received federal funding from various agencies? Have they gone through and adopted the new uniform guidance? And so we're trying to get some clarification for what that means, and we haven't yet heard anything. So there have been 10 federal agencies that, by the way they wrote their guidance and their awards, as soon as the new uniform guidance became effective on November 12th, they were automatically adopted and took in those new provisions. So the 10 federal agencies that have already adopted the new uniform guidance are listed here. And like I said, we're waiting to find out more information for what that means for other federal agencies and when their new awards are going to follow the new guidance. So there are various subparts. Subpart A through F are the main items, such as what are the definitions, some provisions, your pre-award and your post-award requirements, really highlighting some of the cost principles and what is the audit requirement. In the various appendixes, it goes through and helps in determining your indirect costs and identification for various types of organizations. And there was a new section that was added, and this is really focusing on the integrity and performance matters. It's one of the items that we're seeing throughout the uniform guidance, as well as some of the additional memos that OMB has issued, with a focus on performance and not so much on the dollar amounts that are being spent, but what actions are actually being taken and how is that being highlighted. So if we look at Subpart A in regards to the definitions, one item to note is these previously were listed as various subparts 200.1 to 200.99. Under the new guidance, they have reformatted these. They removed all of the 200.1 numbers, and now they are just listed alphabetically. So starting with some of the two most important items that come up a lot of times is just really defining what's the budget period as the interval from the start date of the award to the end date of the award versus what's your performance period. And your performance period is the time interval between the start of the federal award and your planned end date. So your performance period may be a specific area or a specific time period within the overall budget period of your award. So it's important to understand the difference of those two periods when it comes to your federal expenditures and the timing of those awards. We also highlighted what's a recipient. It's usually going to be a non-federal entity that receives federal award directly from a federal agency. A subaward is going to be received through a pass-through entity, and a subrecipient is going to be the entity that's received that subaward from a pass-through entity. It's important to understand whether you're the prime recipient or a subrecipient in regards to what type of requirements and compliance you need to be following. The other big area that we see throughout the uniform guidance is really understanding your personally identifiable information and making sure that that information is not being included in your audit report, included in your schedule of expenditures or your findings, and that making sure that this information is kept confidential and you're not disclosing too much that would all be able to distinguish or trace an individual entity. And that also includes making sure that you have the required internal controls to protect those personally identifiable information. Moving on to Subpart B, the most important item that came up from this in Subpart B was the definition of what is should and must. And this really followed the uniform guidance, kept in line with some of the provisions that auditors understand in following, that if it says must, it means it's required, and that it's something that has to be put into place and that you are required to have those controls or the documentation. If the guidance says should or may, that was following this is really a best practice or a recommended approach for how you should be accounting for something or documenting these items. And just as a reminder, the PPP loan is not something that you need to be worrying about the single audit. Federal agencies, and again, they must have this framework in place. It's really to have a history of your performance and your audit reports, ability to implement any requirements, and have a risk-based requirement adjustment. In Subpart C is one of the first items that became effective in August when the uniform guidance came out, and that was really the never contract with the enemy provision. And so really clarifying this new part of 2 CFR that requires that if you have any expected expenses over $50,000 in your period of performance outside the United States, you do need to be making sure that it's not in an area for which is contracted with the enemy or members of the armed forces being actively engaged. And the second area that became effective in August as well on the new uniform guidance is this prohibition on certain telecommunication and video surveillance services and equipment, so that you're prohibited from using the federal funds or loans or grants for certain areas on to receiving these telecommunication and video surveillance equipments and services. This new Subpart D does raise the level for micro purchases up to $10,000, also raises the level for small purchases from $150,000 to $200,000. It continues to have the third option, which is your sealed bid, your competitive proposals, and your non-competitive proposals. Again, these raised increases on the procurement levels have only been adopted by those 10 federal agencies. So we don't know yet if you may be required to have 2 different types of a procurement method. You may have one for your federal awards for which you've received before November 12th, 2020, when the new uniform guidance became effective. And then you'll have an updated procurement policy under the new guidance after the November 12th, 2020 cutoff, assuming that you've received those new awards and they're following the new uniform guidance by those agencies. So this is really important to be making sure that you have the documentation in regards to what your procurement policy is, as well as what it's going to be as those change. This may also be something to be looking at to make sure your procurement policy for your federal awards is in line with your normal procurement policy for your entity. The other item in Subpart D is financial reporting. There is some financial reporting that must be done in collecting the terms and conditions of the federal award. It must be annually, but it cannot be more than quarterly. So making sure that you have the approved information and collection to be able to complete those federal financial reporting requirements. The other item in Subpart D, and we'll focus a little bit more on the compliance, is the monitoring and the reporting of any program performance. So monitoring is responsible for oversight of the federal award supported activities, making sure that you're reporting the program performance. Again, this goes back to the focus on how the program is being performed as opposed to just how things are being done on the financial level. And this includes some construction performance reports as well, if you receive any funding for construction. There could be, for monitoring, you may be wanting to do some site visits. And what we did notice is there was some performance reports that maybe the requirement got waived because it was not necessary or needed during the course of the program. There wasn't any change to the subrecipient or contractor determinations, but if you are a pass-through entity, you're the one that is required, and you must be making that determination if you're passing on these funds as disbursement, and that role is a subrecipient or that's a role of a contractor. And this is where we see a lot of questions that come up in regards to receiving pass-through funds. Are you considered a subrecipient or a contractor? Because if you're deemed a subrecipient, or if you deem someone a subrecipient, they're required to follow all of the uniform guidance requirements. But if somebody is deemed a contractor, that is just their normal course of business to go through and follow what they're doing, and they would not be subject to the single audit requirements. In regards to your overall cost principles, the focus on here is really your allowability of your cost. And the uniform guidance specifically calls out that these are the factors that you want to be incorporating. So your cost principles on your expenses, it has to be necessary and reasonable. It has to conform with your limitations, both your procurement limitations as well as your internal policies for both your federal awards and your non-federal awards. So it needs to be consistent with those policies and procedures. You have to have a consistent treatment, and it has to be in accordance with GAAP. So that would mean if you have an accrual for an expense, that needs to be incorporated into your allowable cost. So you're going to be using that accrual method for when does the expense occur, and that's when you're going to be reporting it on your schedule of expenditures. You can't use those costs to meet other cost sharing or matching requirements, and you must make sure that it's adequately documented via a contract, a PO, an invoice, or some type of report. And the last item on your allowability of cost is it has to be during the approved budget period for which your award is issued. Continuing with some of the cost principles, there are both direct cost and indirect cost. Your direct costs are those costs that are identified specifically to a particular cost objective of the federal award, while your indirect is more of an administrative. So facilities and administrative costs, such as your depreciation on buildings, equipment, or capital improvement. And then the administrative item is your general administration, general expenses, such as the accounting. A lot of times your accounting function is going to be following in the indirect cost allocation, as you can't charge your controller or your CFO directly to the federal award, but they are incorporated as part of the indirect cost. Some additional items on the indirect cost, you can have a negotiated rate, which could be accepted by all of your federal awarding agencies. The thing that the uniform guidance clarified is federal agencies can also accept a de minimis rate, which is 10%. And if you use the de minimis rate that's available, you don't need to have any documentation to justify that you have this 10% of indirect cost rate. And the federal awarding agencies should be accepting that number of the 10%. We have seen plenty of times that there are issues that come out where maybe a pass-through entity is asking for documentation on that 10%. And this is where we're really focusing on the uniform guidance says that you're allowed to have this 10% and you don't have to have that supported documentation. But again, depending on what's written in your grant or your award, situations may be different. The next section is Subpart F. And this really highlights, so an audit is required anytime you expend more than $750,000 or more on the non-federal entity's fiscal year. So this does follow your specific fiscal year. It doesn't follow the grant program. It doesn't follow your budget period or performance. It's based on your fiscal year that you have expenses over $750,000 for federal awards. A single audit is you expend more than $750,000 during your fiscal year, and you have to have an audit, but you can't have this program specific because you have multiple funding sources. And a program specific audit is acceptable if you are only receiving funding from one federal program, as long as it's not research and development, and that it's in line with the program statutes and regulations, and that they will accept just a program-specific audit rather than the single audit, which includes all of your financial statements of the entity in itself. So our next section is really focusing on some of the recent developments, some additional information on COVID-19 funding. As we mentioned from the start, there's been a lot of updates, a lot of changes. The information continues to come in and it's very fluid on how it gets updated. The AICPA has provided a summary of what uniform guidance is applicable for new COVID-19 related federal programs. And this is a great resource to really understand if you receive certain type of funding that was related to COVID-19 or the CARES Act, is that applicable for you to have to follow uniform guidance? So this is a listing that kind of summarizes that, as well as where you can get more information. For example, as we said, the PPP loan is not subject to the uniform guidance requirements. There is also the coronavirus food assistance program, and that is also not subject to the uniform guidance requirements. So it's really a starting point to understand when you've received these additional funding, what do you have to follow, and do you need to be following the uniform guidance? With that, we just wanted to highlight a couple of the new programs that came out. The American Rescue Plan Act, it provided additional funding in the Coronavirus State and Local Recovery Fund, the Emergency Stabilization Fund, and the Emergency Rental Assistance Program. There's also the Shuttered Venue Operators Grant, and it was part of the economic aid specifically for hard-hit small businesses, nonprofits, and venues. It's almost $16 billion in grants, and it is administered by the SBA Office for Disaster Assistance. It's really focused for live venue operators, theaters, museums, zoos, aquariums, those that were really had to shut down because of COVID-19. And they had to be in operation as of February 29th. The other thing to note is that if you received a PPP loan during a certain period, this grant may be limited for how much you can receive. The other item that came out that was a pretty big interest is March of 2021, OMB issued a memo. And this memo was addressed to the executive departments and agencies of the federal government that received additional federal funding and who then passed that federal funding on to others. And it really was focused on the fact that the government needs to make sure that the American public has trust in how the federal government is providing the additional funds of public money to organizations and to entities for COVID-19. So it focused a lot on the accountability and transparency and highlighting what the executives for the various federal agencies need to put in place. And it encouraged that any federal agency who passed on additional American Recovery Act funding, encouraged them to make sure that they were telling people to follow the uniform guidance. And so we'll really kind of just focus on some of the items that are highlighted for could impact those entities that are non-federal that receive this funding. So as I mentioned, really focusing on performance reporting, a focus on measuring the performance on achieving program goals and objectives, sharing those lessons that are learned and program outcomes, and having this open communication. Maximize risk management approach for direct assistance, focusing on procurement of common or shared goods. So can you enter into an agreement where you can share goods and services among somebody else who's doing a similar area? And then financial assistance for for-profits. It said, you know, maybe we should make those for-profits have to follow 2 CFR 200 because there's not great guidance out there for the for-profits on what they need to follow if they receive federal funding.
Shannon, we have a question that probably is worth addressing live. A couple slides back on the Shuttered Venue Operator Grant for the arts and cultural organizations, and really just talking about timing here. If they're applying for the award and it comes in 21, obviously, you know, they have to consider a single audit, but also this award does allow to go back and capture prior year expenses as well. So maybe you can elaborate as to, you know, what you already described around period of performance and pre-award costs and those sorts of things as to how it counts in which period.
Right. So one of the things on these new, specifically on that, is it is based on expenses from a previous period, and so those expenses would all be in that pre-award. So it's going to be, how is the award written? And the items that I've read on the funding on that grant is how much money they're giving you is based on your historic numbers, but how you may be spending the funds could be your expenses for the future. So it's really going to be, how are they expecting you to be using that award in the future? So it may be that it's based on your 2020 gross operation numbers, but it's for your future expenses based on your period of the award and the performance, as opposed to all of the pre-award costs and being backdated. So there's, one of the things is that portal just opened up. We're still trying to learn more information regarding that, because if they do go back and say, we'll give this to you in 2021, but you're allowed to use all of your expenses from 2020, it will call into question what does that mean in regards to the due date for the award. And that actually, those due dates are addressed in this memo that was issued to those federal agencies, because of the fact that the guidance for these federal awards, especially those from COVID-19 funding, we were told in August that it was going to come out in September, and then it was going to come out in October, and it didn't come out until December. And the original due date for anyone who's a junior end was March. And so as auditors, we were rushing around trying to figure out, when do we have to have these audits done if they've received additional funding? And the funding kept changing. They came out with, we're going to incorporate all of these programs, including the additional ones that got COVID-19 funding. And then they decided not to include about 5 or 6 awards. And so I know I had a couple engagements that we held off on doing the single audit portion of the award because we were waiting for the new guidance. And then the new guidance came out and didn't include their award. And so we were rushing to get it, to make sure that it got done, because they didn't get an extension because their award that we thought was going to be included wasn't included. So there is a lot of still unknown in regards to the timing for the audits and what would need to be captured at what time.
And this award is a great example, and but it's not unique in that, especially during this period of COVID, a lot of the funding may include you to count costs that were from a prior period. The principles don't change from what already is in our framework, right? So you can't have a federal expenditure until you have an award, right? So you have to, if you get your award in 21, then that's sort of the starting point for counting your federal expenditures. Now, the period of performance can be what it is, and that may include prior year periods. And so that's often referred to as pre-award costs. Generally, most grants don't allow you to claim pre-award costs, but obviously we're in unusual times. So your federal award expenditures are likely to be, in this case, a 21 event, but you can count those, in some cases, 2020 expenses kind of on day one, if you will, and then there are some future obligations of future expenses you need to incur as well. So a little bit of a nuance you have to pay attention to as it relates to this grant in particular.
And that actually leads us right to the next slide that really talks about pre-award costs, that they could include those costs that were incurred from March 2021 through the public health emergency. They also talked about you could have an extension on expiring awards up until December 31st, 2021, to be automatically extended with no cost for 12 months. There was certain exemptions for procurement requirements, as well as an extension for your financial and other reporting. Again, this memo was issued to the federal agencies for things that they should be thinking about in the award. The next item that I just kind of touched upon was an extension for single audit submission. So it says that the agencies should allow recipients and subrecipients that hadn't filed their single audits with the Federal Audit Clearinghouse as of the date of the memo, which was March 19th, that have fiscal years through June 30th, 2021 to delay the completion up to 6 months beyond the normal due date automatically, as long as the organization or entity has documentation for the delay, such as you're still trying to find out what your funding sources were, everybody was working remotely. So this is something that we are definitely keeping our eyes and ears open for, as we know that this will have a big impact, again, on all of our financial statement audits or single audits, to understand what the potential extended due dates may be for these audits going forward, or at least under the new COVID guidance and application. The next item that we wanted to highlight was what's included on your schedule of federal awards. So we've touched on it a little bit of when does a federal expenditure occur. If your grants, cost reimbursement contracts, or other direct appropriation, it's when the expense or transaction happens. If you have subrecipients, it's when you make your disbursements. And loans and loan guarantees is going to be when the loan proceeds are used. Donated property is when the property is going to be received. So anytime that those happen, that's when you're going to include that expense on your federal expenditure. Highlighting a couple more food commodities when it's distributed or consumed. And the other item that comes up is program income. So you would need to incorporate that as your federal expenditure when it's received or used. There are sometimes that there are certain awards that are a little bit harder to value, such as your loan and loan guarantees or food commodities. Your loan on your CFA is actually your beginning balance, and then in the notes is where you have your final balance and the outstanding amount of the loan at the end of the audit period. The other item that did come up under the new uniform guidance was they changed CFDA number, which means Catalog of Federal Domestic Assistance, to now being called an assistance listing number. Same numbers are being used. We're just going to, moving forward, call these assistant listing numbers. And then some of the items we wanted to highlight that do impact the CFA is specifically related to COVID-19 updates. There were new programs, specifically the CARES Act. Some existing programs did have some flexibilities or waivers of their certain compliance requirements. Specifically, I know in the HUD programs, there were certain items that they didn't require had to be documented in regards to how funds were being spent because they knew that that documentation was a little bit harder to achieve in the COVID-19 environment. So there were some changes that we saw on some of the compliance requirements for 2020, and that will continue into 2021. We highlighted the 4 largest programs from the initial funding of the COVID-19 Paycheck Protection Program. Obviously, it has been the largest, and it is not subject to the single audit. The things to note in regards to the COVID-19 is if you did receive funding that has been identified as a COVID-19 additional expenditure, that needs to be noted on the CFA. And the example is it would be noted as COVID-19 dash and then the grant award number. And then your original award would stay as your award name and number as well. But any additional amounts that were received from additional funding on COVID-19 needs to be separated out on your CFA. There has been a list of existing programs that received additional CARES and funding as reported on the CFA. And as I mentioned, a lot of awards received additional funding in the CARES Act, but they didn't necessarily need to have an additional supplement for the COVID-19 funding. Originally, we thought all of these awards that received this additional funding was going to be incorporated into the compliance supplement and additional compliance requirements, and it was a very small number that they actually issued new award numbers for and new compliance requirements. But any of these federal agencies would still require that you separate out your funding for COVID-19 versus non-COVID-19. So moving on to the single audit reporting package is, this is all well and great, but what's the end result? What do I actually see at the end of the day? And when it gets to the single audit reporting package, what that means as a single audit is it's your financial statements that follow AICPA standards as well as government auditing standards, also known as Yellow Book. But it also includes your compliance audit with the government auditing standards as well as uniform guidance. It generally has to be submitted to the Federal Audit Clearinghouse within either 30 days of your audit report being issued or 9 months after the end of your audit period. The items that are included are your financial statements in your CFA, and that's the responsibility of management or the individual entity. The opinion and the fact that it's in relation to the CFA, that's going to be the responsibility of the auditor. A Yellow Book report is the responsibility of the auditor. a single audit compliance opinion as the responsibility of the auditor, a schedule of findings and question cost, which includes that it has to be prepared for all single audits. It summarizes your audit results. I always look at this as kind of the report card for a federal agency to just be able to go and look at the last 2 or 3 pages of the single audit report, and it summarizes how the audit went, and then they can go back and read what they want to read. And then any question cost over $25,000. And again, that whole schedule is going to be performed by the auditor. And then the summary schedule of any prior audit findings and the corrective action plan are both responsibilities of an auditee. So as an organization or entity that receives federal funding, your responsibility is you need to make sure that your single audit is performed properly as well as submitted timely. So it's your responsibility to make sure that it's planned and performed and you're able to submit it to the Federal Audit Clearinghouse by the required due date. Making sure that your financial statements and your SEPA are performed and prepared. Follow up or take corrective action on any audit findings. You'll have to prepare the summary schedule of prior audit findings. So that's really focusing on what was the finding that happened in the previous year and how has that been addressed, or is that issue still included, at which point it would be a repeat finding. Prepare a corrective action plan. There has been some information in regards to what should be incorporated into that corrective action plan. It needs to be a separate document from the auditor's report. That would be issued for each individual finding, and it has to be on your individual letterhead. And then you would maintain internal controls over financial programs as well. Moving on, it's your responsibility to make sure that your federal statutes and regulations and the terms and conditions of the federal awards are followed. You have to evaluate and monitor the compliance. Take any action if any non-compliance is identified. This is both as your award as well as if you have any subrecipients. And make sure, again, that you safeguard personally identifiable information. So that includes that there's a financial statement opinion information. There is the GAGAS reporting, which highlights the internal controls over financials. And it specifically adds the question of, were there any material weaknesses, any significant deficiencies identified, or any non-compliance that came up in the financial statement. Then there's a section that specifically highlights for federal awards. Same thing in regards to your major programs, any material weaknesses, any significant deficiencies. Then what type of auditor's report was issued? Was it an unmodified or a clean opinion, or qualified or adverse or disclaimer opinion? Summarizes any audit findings. It then highlights what major programs the auditor tested, including the CFDA number and the federal program name or cluster, the threshold between an A and a B program, and whether or not an auditee is a low-risk auditee. So these are all included in the summary of the auditor's results at the end of the single audit reporting package. Then part 2 would list out any findings that came up related to the audit of the financial statements or the federal audit findings, and it includes your GAGAS finding elements. And then part 3 are the findings that are specific for the uniform guidance. The next part is the summary schedule of the prior findings, and this is what needs to be completed by the entity who's received the federal funding. So it's the status of those audit findings from the previous year and how has that been addressed. It needs to include what the audit finding was, as well as whether or not you need to re-report it. The last item in the single audit reporting package is completing the data collection form. This was updated in June of 2019. It includes the new data collection form is the notes on your schedule of expenditures, specifically your significant accounting policies, whether or not you use the de minimis cost rate, and any other notes that came up. It also needs to include the text of the audit findings, the text of the corrective action plan, and then it has your summary of your schedule of expenditures of federal awards. One of the items that I'm finding more and more on my engagements is once their data collection form is issued, they're receiving an email back from somebody who they've received a majority of their funding for, asking for any other communication that may have been received. And this includes the audit exit meetings, whether or not it's done via PowerPoint or a Word version, and any written documentation that's provided, including a management comment letter for items that maybe were not deemed a material weakness or significant deficiency. So we are seeing that the federal agencies are coming back to their awardees and asking for additional communication for which the auditors may provide to them that don't go on to the data collection form. So the next section here is really focusing on what are the compliance requirements and what is it that should be known. So when it comes to understanding the compliance requirements, I always say that the first place to look is reviewing your grant agreement for terms and conditions, understanding what the uniform guidance requirements are, and specifically there are funding agency resources that are included in the uniform guidance. And then the next section to look at is understanding the OMB compliance supplement, which is looked at as really the auditor's guide for what are those compliance requirements that need to be tested for each federal funding. And this year there were 2 compliance supplements. So it was issued in 2 parts. Normally this comes out in July, and it's always for effective on the June 30th of the previous year. This year it didn't come out until August, and when it came out in part 1 in August of 2020, they said stay tuned for part 2, for which we'll address items that were noted for CARES Act and COVID funding. And so part 2 was for reporting requirements and anything after September 30th of 2020. The compliance is regularly updated during the year. They did not do many updates related to COVID-19. They focused on programs that were not related to COVID-19 in part 1. They did keep what was called the 6 requirements, so federal agencies could go through and they had to pick 6 required items for which they wanted auditors to be focusing on. They removed, there was a part 2 part 3s. One was for any awards that were pre-uniform guidance, which was actually from 2015 and before, and they removed that as they were finding less and less awards that are still being used that were pre-uniform guidance. There is part 5 that includes clusters that did not change, and they did include an appendix that said if you receive COVID-19 funding, there may be additional items that you'll want to look at. We'll send out a new updated compliance supplement specifically for COVID-19 implications, but you'll want to make sure you review those awards and the funding related to it. They finally issued our supplement, which was specifically related to COVID-19 funding, and that came out in December. So if you were an organization that it was known your CFDA number was listed in the addendum, you automatically received an additional 3-month extension on when you had to have your single audit completed. They also threw in some other aspects that they decided were important for auditors to note, and that included a new reporting requirement. And so if your program is noted that reporting is an area that is direct and material and needs to be tested, and it's for an audit after September 30th, 2020, there were new requirements that this addendum put into place. And that did not matter whether or not it was a COVID-19 program or not. It was required for all major programs for audits after September 30th. And I just wanted to highlight some of the compliance requirements that we see the most often. So the ones here that are in red, those are the normal ones that we see for the activities allowed or unallowed and cost principles. When there was a requirement for PIC 6, they determined that activities allowed or unallowed and allowable costs and cost principles could be tested as one. Cash management really is focused on making sure that your organization has a good way of putting in your reimbursements and getting reimbursed in a timely manner. You're not waiting to do a reimbursement for a cost reimbursement or pulling down maybe every 6 months, but making sure that you're managing your costs. Talking about eligibility, equipment and real property management, making sure that you're charging, if you charge the direct purchase of an equipment, then you're not also charging depreciation. Matching is the additional funds that you have to raise that cannot be from other federal grants. A level of effort is really if your grant requires that you do a specific level under your performance. We talked about your period of performance as a specific time period. We'll touch a little bit more on the compliance requirement for procurement. And then program income is any additional income that may be received that you need to incorporate that into your federal expenditures. And then special tests and provisions is really where the federal agencies can say there's specific additional items that we want you to look at. We may see that as your specific program person for who all your key personnel, if there's any changes in key personnel, that needs to be known, or any other tests that don't fall into these other compliance areas. So just to highlight a few of these on activities allowed or unallowed, it's a specific requirement for what activities can be charged to a federal program. And the compliance is really understanding what activities can and cannot be used under the specific program. And so the question that usually comes up is, what are you spending your funds on and what rules need to be understood? And this really falls back to looking at your allowable cost and cost principles. So the cost has to be approved. It has to be necessary and reasonable. It needs to look at your various limitations. It has to be consistent with your policies and procedures that you apply throughout your whole organization and entity. And it has to have consistent treatment. It can't be included as another cost for federally financed program. Where this question really came up was for those entities that received a PPP loan, but they also have other federal funding sources. If you received a PPP loan, you could not, what they've deemed double dip. You couldn't request reimbursement on your federal grant and also request payroll reimbursement through the PPP program. So what we saw in some of our entities was they may have been approved for a large amount of a PPP loan, but once they went through and they determined what they would be charging to their other federal grants, they may not have needed as much of the PPP because it was already being charged to other federal sources. And so that's where this point number 6 comes in, that it can't be charged to other federally financed programs. The cost can't be used to meet cost sharing or a match requirement. You need to be making sure that your costs are documented. In regards to indirect costs, it has to follow your allowable cost provisions and be supported. And again, in accordance with GAAP, using the accrual method for when the expense occurs. There is the de minimis indirect cost rate that can be applied. The other big item on cost and cost principles is compensation. So making sure it's for existing employees that you have time and distribution reports or records. Doesn't need to be an actual time card, but you have to be able to document how employees spent their time in order to charge it on the federal program. Wanted to highlight a couple of the errors that we sometimes see in allowable cost and cost principle. The biggest item is direct costs can't be allocated to the program. The costs aren't reasonable. It may not be in accordance with GAAP, so you have incorrect accruals. You're unable to provide specific data and information, such as a missing I-9, missing invoices to support the expense, or you're just not familiar with what the new single audit testing is and requirements. Comes to eligibility, it's really focused on the specific requirements that it's going to be different for each federal program. And you're going to need to understand the awards and what's written in the awards for what records you need to have, the time period where a person has to be eligible. Just because a person's eligible 1 year, they may not be eligible the following year based on the requirement. We talked a little bit on the new uniform guidance and the procurement. Really the requirement is that you must use one of the following procurement procedures. And this is what came out with the first uniform guidance, even though we've now seen some updates on the dollar thresholds. So the micro purchase is anytime you acquire supplies or services that are not to exceed in aggregate $10,000. You don't need to have competitive quotes, and it's really the micro purchases among qualified suppliers. You have the small purchases and procedures, so that's up to the $200,000. Sealed bids are going to be publicly solicited. It's going to be fixed price, and it's usually going to be awarded to the lowest bidder. And we see sealed bids more in construction contracts. The other competitive proposals, so that would require it has to be publicized. You have to get it from an adequate number of qualified sources. You have to have some type of a written method for how you're going to conduct your technical evaluations of this proposal. A non-competitive or a sole source would be it's only provided from one person. Maybe it's an emergency. You have to have authorization to have a non-competitive proposal. Where we see this is if you've purchased an equipment before and you want to get a second one. And so you've already have used that vendor. That may be when you're able to have a non-competitive proposal. In the procurement policy, you have to have the general procurement standard, understand it, full and open competition. You could look at cost and price analysis. And they do want to focus on contracting with small and minority businesses, women enterprises. The next item is just focused on some of the financial reporting. So you have to report your program outlays or any program incomes on the cash or accrual method, and that's going to tell you in your federal awarding agency if they can follow cash or accrual. And you have to report that accrual information in regards to your accounting records. There's also the performance and special reports, and that's going to be highlighted in your federal award for what needs to be followed. The item that we get a lot of questions about is always subrecipient monitoring. So when it comes to the subrecipient monitoring, you're required to make sure that the recipients are monitoring the activities of subrecipient on the federal award. So if you do provide funds to a subrecipient, it is your responsibility to complete a risk assessment at the time you provide the award, to make sure you identify that this is a subrecipient of the federal award and they have all of the information that is necessary and needed for them to understand the compliance requirement. You have to evaluate the subrecipient's risk of non-compliance, continue to monitor their use of the federal funds, make sure that if they have over $750,000 of federal awards, that they're having a single audit, and you want to be making sure that you obtain a copy of that single audit and you know any findings or information that comes out. And the reason why that's important is you need to evaluate the impact of their activities or any findings that they have onto your individual entity as well. So there are some great checklists out there in regards to how do I know if I pass on these funds, if they're a subrecipient or a contractor, or if I receive funds, how do I know if I'm a subrecipient or a contractor? So a subrecipient, some of the characteristics are they're going to determine who's eligible to receive the funds. A subrecipient is going to be responsible to measure the performance as it relates to the federal program objectives. They're going to be making those program decisions, and therefore they have to adhere to various program requirements, and the funds are to carry out a program that's for public purpose. The difference is a contractor, they provide these goods or services in normal operations. So what's being done would be for a construction contract, they're just normally doing construction, so they're going to be considered a contractor. They provide these similar goods and services to many different purchases, many different entities, many different organizations. This is just what they do for their business. So they operate in a competitive environment. The goods and services are just an auxiliary. They're not something that's being done to require the program requirements. And so therefore they would not be subject to the compliance requirements. And if you do have pass-through entities that you pass the funds on to, you want to take into account your prior experience, what's their prior auditors for federal awards, consistency or any changes in the personnel and the systems, whether you need to impose any specific conditions on them. And all of this must be documented. Your assessment of the subrecipient must be documented. You want to make sure that if they have over $750,000 that they're having a federal award, and making sure that you consider any noncompliance that may be noted. The other item is you need to make sure that you pass on various information on the award, such as the federal award number, the period of performance, that federal funds are being obligated. You have to include the CFDA number and let them know whether or not any of the information is for research and development. And the last slide here is just some highlights of, if you have a subrecipient, what are some of the monitoring activities that you must have in place. So you must review financial and performance reports. You must follow up for any deficiencies that come up during the audit, especially for those awards that you provide funding. What it came up with is, just because they may have a finding, if that finding is not related to the award for which you gave them funds for, you don't need to follow up to ensure that that's been addressed. You only need to follow up on the ones for which you provide specific funding. And then you must issue a management decision on those audit findings. And the other items are just some recommendations, maybe providing training, performing some reviews, and if they're not having a single audit done, maybe arranging for some agreed upon procedure so you feel confident in the items that are being performed.